Hello and welcome to BQ Prime. A very good morning to all the viewers. I am Meeral Dadia and you're watching Stocks to Focus. Clearly, one company that reported numbers is Kesoram Industries. Revenues are up around 12 to 13%. EBITDA has seen a growth of around 32%. The losses have reduced as well. Joining us on the show to discuss more and give us the strategy going ahead is Mr. P Radhakrishnan, whole-time director and CEO at Kesoram Industries. Mr. Radhakrishnan, good morning and welcome to the show.
Good morning. Thank you.
Mr. Radhakrishnan, my first question coming is, has the number met your internal expectations? Losses have reduced and clearly, the previous quarter as well, you have said that you're expecting to be back in the black soon.
Yes. Our numbers, we could have slightly done better on the realization front as well as the volume front. But by and large, we are directionally going in the right direction. For the whole year, we should be in the black if we go in this direction.
Okay. So overall, if you see from the margins, yes, have seen some bit of an improvement that has come in this around. You were expecting the EBITDA to improve as well and from a per ton basis. Where does it stand currently?
So the EBITDA per ton currently stands at about 581, close to, for the half year. We want to move to between 650 to 700 is what we are targeting, ideally. Selling an 8 million ton and somewhere around 650 is what our desire is the EBITDA should be.
Okay. And in terms of the business segments as well, where are you seeing growth come from going ahead between cement, the viscose rayon, and the filament yarn?
So I see our subsidiary has got transparent paper and the yarn, and parent mainstay is cement. We see a robust growth in cement, both on the retail segment as well as on the institutional segment. And we also see a good traction on the rayon because it's a substitution for silk, as well as our transparent paper, which is biodegradable and home compostable. It is a replacement for plastic. Overall, we see good times ahead and things will improve for Kesoram.
Okay. And with said and done, how is the capacity utilization looking like?
So clinker capacity is close to 94% around. So we can always scale up more the blended cement we sell, more better utilization of clinker we can do. That's where we should go for. We can, without increasing or spending on capacity capex, we can go up to 8.5 to 9 million sales.
Okay. And as you mentioned about the realization as well, was it lower, say, in that range of 25 to 30 rupees per bag during the monsoon? And are you expecting a recovery from there, taking the way construction activities are picking up post-monsoon now?
Yeah, directionally it was lower because it's a monsoon quarter, but the volumes were robust. The realizations were down, but it was compensated by cost largely. We expect the prices to go up because for us as a company, the prices have doubled. So it is only logical the cement price goes up and stabilizes. At least, as I have said in my previous interviews too, that it should be about 80 rupees, 90 rupees per bag up. But we hope in Q3 and Q4, we will be 30 to 40 rupees up from where we were in H1.
Okay. And in terms of cement sales, how much do you think you will be able to achieve in terms of tons in FY24? Because clearly it's a record sale number in the first half. A 3.73 million ton is what we've seen as compared to 3.19 in the same period last year. So would it be right to say that, even if you go with the basic number, a double of 8 million tons is what can be achieved, or something higher than that is a possibility, taking into consideration that the construction activity will pick up?
Yeah, we are confident our guidance of 8 million ton we should be able to achieve with a bit of a stretch. So we are not saying now we will end up below 8 million tons. Our endeavor is to achieve 8 million ton, and it is reachable.
Okay. And as you've mentioned that you're not going to see a good amount of capex now because the capacity is enough, what will that translate into if you have to look at the full year EBITDA then?
So close to anywhere between 450 to, depending on the price, 450 to 500 crores of EBITDA is what we should do. We should end up with.
Okay. And in terms of the packaging business, which is Signet, when do you expect it to be cash positive?
From Q1 of FY25.
By then, you're expecting that business to be cash positive as well.
Yes.
Okay. And very lastly, earlier we had been hearing that you will increase capacity to almost 15 million tons, but that was in the next 3 to 4 years. Is that plan on track currently? And if so, what will the spends look like?
So very much we should get on the drawing board, because it will be a brownfield. We have adequate limestone reserves. We need to put up one more kiln and more spread with the grinding units or a mixing plant. That's the way we should go forward. So it's very much on the radar. So the first priority is to sustainable level 8 million plus, we should say. And then we should refinance the existing high cost loan. Once these two are through, then we will focus on how do we scale up our capacity.
Right. So my last question coming to you is, we've spoken about what FY24 could look like. But as a company, what's the next milestone that you want to achieve?
2 times EBITDA, our debt should be. Our debt should be somewhere 1,100 to 1,200 crores. So if you are a 500 crore company, our debt should be about 1,000 crores. That's the milestone.
Any repayment is planned in the second half?
Not substantial, but once the refinancing plans are afoot, probably we want to leapfrog from 19% to 11 to 12% interest. That's the way we are looking at. That will bring in a saving of about 200 crores on the EBITDA itself. That will straight away increase the cash availability for us.
Right. I think that's going to be a key one to monitor as well. Thank you so much, Mr. Radhakrishnan, for joining us on the show and sharing the views. So clearly, that's the management of Kesoram Industries, and clearly very confident that they will probably get into the black soon again in terms of FY24 as a year, and lots of plans to improve performance from here on, as well as the balance sheet. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BQ Prime.